US dollar is on the front foot today, guys, and that is despite more dovish action from the Fed. So guys, quickly, let's just talk about what the Fed did today. They announced this new lending scheme where effectively foreign central banks that have an account with the Fed, which by the way is most of them, they will be able to swap treasuries, which they own. So just for a bit of context, most foreign countries hold some US government debt in reserve as a way of saving money. And these foreign central banks will be able to exchange that debt for US dollars rather than having to go to the actual free market to sell it. They can just give it straight to the Fed, who will give them dollars. And the reason the Fed is doing this is basically they want to flood the market with more dollar liquidity. It's what they were doing all last week, it was what they were doing all of the week before, and it has had the effect, generally in the last couple of weeks, of weakening the dollar. However, today, that's not the case. On this news, we saw a couple of negative ticks in the dollar, but it was quite short-lived really. The main thing today is the dollar's been moving higher, and the main thing is month-end flows. What are month-end flows? Well, it's quite an abstract, sort of inexact concept, and it's definitely an inexact science. Basically, at the end of the month, big institutions, asset managers, funds, they often have to rebalance their portfolios to adjust their risk profile or fit whatever criteria that they have to meet in their portfolio. So you see a lot of activity at the end of the month at these big funds that can cause quite big moves in the market, and sometimes these big moves in the market aren't really linked to the fundamentals on the ground. So like today, for example, dovish action from the Fed, typically you would see the US dollar getting hit by that. That's what we saw last week, it's what we saw the week before. But today, a lot of our sources, a lot of people in the market have been talking about how according to month-end flow models that some of these sophisticated institutions produce, the dollar has been a buy into the month end. And guys, it's not just month end, it's actually quarter end as well. Remember, it's the end of March, it's the end of the quarter. So, a lot of these big funds aren't just adjusting their portfolios for the end of the month, they're doing it for the whole quarter, which is a bigger adjustment, if you know what I mean. So that, guys, has been supporting the US dollar today, despite all that Fed stimulus. Guys, we are all over these important fundamentals and themes that affect FX markets at Freak Network. Check us out on YouTube, check out our memberships, and that is pretty much it from me for now. I will see you in the next one.